Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Taxbytes for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi, my name is Stephanie Wickham from expattaxes.ie. You're listening to the Taxbytes for Expats podcast, the show that explains the do's and don'ts of income taxes for people who are moving to or from Ireland. Hi everyone, thanks for tuning in. It's a beautiful sunny morning here in the southeast of Ireland, and I'm looking forward to this episode quite a lot actually, because it's a topic that we come across quite frequently. So today we're going to be talking with Paul Quinlan of topmortgages.ie about all the issues expats need to know about when they're coming back to Ireland and hoping to buy a property and get a mortgage. So just a bit of context before we introduce Paul. He's the managing director of topmortgages.ie. And Top Mortgages are an unbiased mortgage brokers in Ireland. They focus on helping first-time buyers secure their first home. They help existing mortgage holders save tens of thousands on their interest payments. That's always a good thing. And they also work with our focus today, expats returning home who need a property mortgage. So I don't think that intro did you justice, Paul, but thank you very much for joining us.
No worries at all.
Pleasure to have you on. So to kick off, tell us a little bit about yourself, about the business. For somebody listening who knows nothing about mortgages in Ireland, tell us about what topmortgages.ie does, to the extent that I haven't, with that lovely intro that we gave you.
No worries at all. Yeah, I started Top Mortgages about 7 years ago now at this stage. I worked in various other mortgage brokerages for about, in total, about 23 years at this stage. Decided to make the move about 6 or 7 years ago because I wasn't getting any younger. Things are going very well. We're supposed to be at a small scare during COVID, like everybody else. I think it was the end of the world, but things have been moving very well. I can't complain. We specialise in all types of mortgages for first-time buyers, switcher mortgages, remortgages, equity release mortgages. We look after the investor market as well. But we're one of the few brokers in Ireland that specialise in expat mortgages. I've been doing them solid for probably about 10 to 12 years now at this stage. So
you're definitely, we hear this a lot when we kind of, we're quite active in some of the forums for expats, and you guys are mentioned constantly as, having a great reputation, really, knowing the market, because it's quite a specialist thing, I'd imagine, is it? Mortgages for expats coming back to Ireland.
It is. It's a little different because I suppose you're dealing with documentation from all over the world, with different types of bank statements, different languages. It is, a lot of brokers do tend to avoid it because of the paperwork involved, but I suppose we're well adverse now to dealing with mortgages from Australia, New Zealand, Canada, the US, Middle East, UK. So we're well used to dealing with them and basically what documentation would be required from all of those areas. There's certain documentation that you can't get in some countries, but we know kind of ways around that, like, as well. So any kind of pitfalls that we know will happen from certain countries, we know how to deal with them 99% of the time, basically, anyway.
Yeah. And one of the things we would have seen, and I'm sure you've observed it as well, given how long you've been in the market, is, just the number of people Coming to Ireland to live, kind of returning to Ireland. Maybe they left during the financial crisis. I know we did, and go overseas for 7 or 8 years. Maybe go overseas, meet somebody there, marry, or get married at home, but ultimately spend time outside of Ireland and come back with the intention to purchase a property or build a house, or just essentially come back, set up life here. And that's something that we kind of saw even accelerated during COVID, people from the UK moving back, wanting to work for their UK employer, but live in Ireland. I'm sure you get all sorts of different scenarios.
Yeah. I suppose there's a few different options. There's a few different, options, probably the wrong word. There's pretty different ways this can work. I suppose there is a portion of people who come home and they have to start because they don't have a qualification as like an IT consultant, accountant, or something like that. They might have a trade, so obviously they can't work remotely if they have a trade like that. So they have to come home and find employment over here. Generally, in that situation, the wait time would be probably 6 months at the minimum before they could apply for finance.
Mm-hmm.
You do get option where people do come home working remotely with the same employer. Sometimes they're still paid in the currency from the country they left. Sometimes the employer over here, their Australian employer, might have offices in Ireland, so they move on to the Euro payroll. That would be more favourable because with Euro income, you can use 100% of Euro income.
Mm-hmm.
But when it comes to non-Euro income, we have to shave 20% off to allow for currency fluctuations.
20%? Wow, that's a lot, isn't it?
Now, what we do see, what I'm seeing quite a lot of in the last few years, is that particularly professionals are coming home still working from the same employer, but they're moving from employee basis to a contracting basis through an umbrella company. Now, again, that can, in order for me to, I suppose, apply for finance in that instance, we'd have to get a history of what our earnings have been while they were as an employee with the previous employer. But generally, what they look for is at least 1 year's tax returns. Now, it might be a partial year. They could have came back in, say, July of last year,
Mm-hmm.
and they might have a revenue document, a tax return for 6 months. That would be fine. Once we have a history of what kind of income they're earning, all invoices up to date, just to give them an idea there's no real change in income, could actually possibly higher. Again, we can do that. The biggest stumbling block for people coming back that are not in that they don't fit the employee or contractor box is if they come back self-employed,
right?
Either as a sole trader or a limited company. Then you're waiting probably 2, possibly 3 years before you can use an income for that person when applying for a mortgage. That's the thing.
Paul, because this, I suppose, thinking through kind of, we were just chatting before we started to record there, and I suppose, we tend to work with you guys in terms of we'll provide advice to people coming back who, they want to know what the tax piece looks like. And sometimes, one thing I'm conscious of when I'm giving advice to people is we might say to them, well, this, and this gives you a good tax outcome. And then I always kind of as an ancillary at it, but bear in mind, if you need a mortgage, you need to kind of marry that with the advice from your broker in terms of what's going to work for you. So just to kind of make sure I understand exactly what you're saying there, if somebody, let me give you an example. Let's say somebody had a company in the UK. It was their own company. Let's say it's, they joint shareholders with their wife, let's say, for example. They come to Ireland and they now want to either set up a new Irish company or continue to work in Ireland for the UK company. Are you saying that in the majority of cases, if they want to use that income for a mortgage application, there needs to be 2 to 3 years worth of accounts? Is that what you're saying in Ireland? In other words, showing, okay.
Generally, self-employed applicants abroad are outside policy because we've only one door to knock on lender-wise. And self-employed applicants, if you're working in the UK, Australia, you could have a thriving business over there and you want to use the income over here, they won't allow it. The only type of self-employed income they will allow abroad would be a contractor. For example, an IT consultant contracting solely to, say, Combank in Australia or Barclays in the UK, someone like that, or an accountant doing something similar, cannot have multiple clients. Just contractors the only, and you can only be contracted, maybe possibly 2, but generally 1 customers, all you can really contract to. If you have a company and let's just say, again, in the example you said in the UK, and you're back living in Ireland, and you're pulling an income from that company in the UK, they won't allow that. You have to be paying taxes in Ireland, and the business would have to be more or less established. You'd want to be pulling an income in Ireland for about 2 years in order for that to have any chance for the bank to allow that.
Okay, because interestingly, from the tax perspective, in the majority of cases, most of the time, and I say that kind of with in inverted commas, individuals have to start paying tax in Ireland when they move here. So, broadly, I think what you're saying is, in the example I gave, you don't need to change anything, but you need to manage your expectations around when people are going to be willing to talk to you to give you a mortgage off the back of that. And the sooner you get yourself up to date in Ireland and can show that you're in the system paying taxes here, it's going to move along that conversation. And, I probably sometimes think too much about the human side of it, and it's more because I suppose because we've been through the move back, and I think particularly for people coming to Ireland and they're Irish, it's a bit shocking sometimes, because you kind of think, wow, I went overseas and I've come back, but is it really this hard? And it's really hard for people who kind of come back with an expectation of, I found a property. Like sometimes I talk to clients and they've already started to look at properties before they've come back. So then to kind of have the conversation about the mortgage and find out, well, actually, it's not necessarily going to be like that. It really adds weight to the fact that they should contact a broker like yourselves early in the process, doesn't it? Like to plan is to kind of be prepared.
I try to drill this into people. It's never too early to get the proper advice, because a lot of people would have notions that they can actually buy from abroad, and they think because they're talking to friends and friends have bought, and they think they're in a similar situation to their friends, they can. But in a lot of cases, it could be down to high childcare costs, high rents, again, self-employment status, things like that, where I can probably a 15-minute chat with them, I'd be able to establish whether they've any chance of applying from abroad or whether they have to wait till they come home. It could be they mightn't have any real savings abroad, things like that, because obviously if you're applying from abroad, it's a 30% deposit while you're applying. Now, the majority of expats would have that, or some way close, or they might get a parental gift from parents to help them with the deposit, because the grandparents could be mad to get the grandkids home, things like that. But that is allowable. But I always say, don't never assume, because a lot of people do assume that they do qualify. There's a lot involved in expat mortgages. I had a recent case, a very, very strong case recently. The guy was on serious money, and he was an employee, but on his credit report there was a number of directorships listed on his credit report abroad, and the bank declined it because of that. Although he was an employee on a huge salary, they wouldn't do it because of that.
Where did the banks get those credit reports from, Paul? Like if somebody's been overseas... The
customer gets them. The customer has to get them. For example, you're in Australia, you go to either Equifax, Experian or Illion. Like we have a list. I'd always email someone a list of all credit agencies around the world. For US, you get them for TransUnion. UK would be Experian. The main issue, you can get them in the Middle East as well. Not in all countries in the Middle East, but you can get them in the Middle East too. And another thing as well, of what expats should, particularly Middle Eastern applicants who are leaving the Middle East and are looking to apply kind of within 6 months of when they come home. Once you leave the Middle East, you can't get the time of day. You will not be able to get a credit report. You won't be able to get that from previous employers. They just don't do that. So this harps back to getting the advice early, where they have to get evidence of 3 years' earnings from previous employers in the Middle East. Get the credit report before you leave the Middle East. These are all the things, the pitfalls. Because when you're back home and they go looking for one, you can't get one. Simple as that.
And the thing is as well, I mean, let's be realistic. When people come back, you're straight into life here, aren't you? You're getting kids into school, you're reconnecting with friends, you're busy, and you're sometimes or often in a different time zone. So that was one thing that we found was when we came back, trying to get information from an Australian bank, for example, was nigh on impossible because of the hours they'd work, or even something simple like they would need a code to text to your Australian number, which might not be active anymore. There's all these little things that just make life that bit more difficult. So yeah, I think, the thing I'm hearing here is have a conversation with a broker before you get on the plane as early as you can. Have realistic expectations, and don't assume that your situation is identical to your friends simply because on the face of it might seem to be that way. It really is, the devil is in the detail. And is it, is it all bad news? Like, what do you find? Like, you guys make a business out of this. So obviously you are routinely and successfully securing mortgages for expats every day. Like, it's obviously possible. It's just about, knowing how to go about it.
Yeah. Look, our approval rate is very high because I suppose I won't say weeding out is probably is an awful word to use, but we'd be able to, if someone doesn't qualify for a mortgage abroad, we can spot that straight away. We can spot the potential pitfalls. And if it is a situation, we tell people, look, you're not going to get this you won't be able to get a mortgage while you're abroad because of this, and this. You have to wait until you come home. So, and I'd always say to people, look, before you come home, a month or two before you come home, contact me again. I'll tell you what information you need to bring home with you. So when you do, it just avoids the hassle that you can't get a credit report. If you're looking for a credit report, you're trying to ring Equifax from Ireland at different crazy times. So I'd always get those documents just before you leave. So we'd have all so it avoids all that hassle when they come home. And I put them on a path then, okay, here's what you need to do. I'd have a fair idea of what kind of income they would be on, even based on I suppose their qualifications and stuff like that. So I'd establish then what their max borrowing potential that they want to apply for. Some people might want a mortgage of more than 200, 300,000. So I tell them what they have to do. Are you going to be living with family when you come home? Will you be renting privately? Things like that. I need to know all that information, so I need to put them on the right track. So when they do come home, when they start working, say in month one, they get the job straight away, that they're on the right track and they're doing everything right. So at the end, so in 6 months down the road, when they apply, they get approved first time. There's no messing around.
Can I ask a question? What do you mean when you say being abroad? And the reason I ask that is because this is where I find people get a bit confused, and understandably so. Let me explain to you what I mean. So from an Irish perspective, there's a definition of tax residency, and it's based purely on the number of days that you have in the country. So in theory, you can be living in Ireland, working in Ireland, but you haven't necessarily triggered tax residency yet. Then what we find is the Department of Social Protection, to the extent that it's handing out maybe social benefits to people who have an entitlement, will have a definition which I think is habitual residency, which is actually different again from the tax residency rule. And then you've talked about applying while abroad versus being in Ireland. So maybe just explain to me what you mean by that. In other words, if somebody comes back and applies while they're here on an extended holiday, I'm assuming you're saying it has to be you're actually physically living in Ireland when you're applying. Yes. Okay.
Yeah, there's a couple of ways that can happen. Mainly people, obviously, again, I'll take the example of a family, a couple with or without kids. They come back and they're both working here. The bank will want a history of you working here. They'll want to see pay slips. They'll want to see banking activity. And generally, if they're paid in euros, no matter how qualified you are, the likes of Bank of Ireland and Permanent TSB, they will insist that you're back in Ireland 6 months before you can entertain an application. It doesn't matter if you move back with the same employers, they'll insist on that.
Wow.
Now, also as well, what another scenario that we would get would be couple come home, it's normally that would be the wife is actually at home living with the kids. Say for example she's not working, she's a homemaker, she's living at home. She's 2 or 3 kids. The husband could be working in the UK or could be working in the Middle East. That wouldn't be that would be referred to as an FX mortgage, foreign exchange, rather than an expat mortgage, because he's coming over and back to see the kids. Maybe he could be working for 4 weeks on and coming home for 2 weeks to see the family. That's another scenario as well. In that instance, then what we'd have to factor in would be accommodation costs and flight costs over and back to UK or wherever he's living. Who covers that? Does the employer cover that? In a lot of cases, the employer does cover flight costs. They mightn't cover all of them. They might cover a limited number of them, but we'd have to factor in accommodation costs. Does the employer cover that, or does the applicant have to cover that? So there are two different scenarios, but generally the majority, I'd say 70% of applicants they'd apply from abroad while they're living and working in the abroad, whatever country it is. They acquire the property while they're abroad. So when they do come home, they have that property to move into, so they're not looking around for rental properties. They're not living with family and things like that. Most people do want to have that property bought before they come home.
And from the point of view of, because I'm just thinking about it from a cash perspective, let's use that example. You've had to put up more of a deposit. Are you paying a higher rate? And does the rate change when you come back and you start to live here? Or are you basically locked in on an expat rate then until you can renegotiate?
The rate that we get for mortgages, it's under the holiday home banner with Haven Mortgages. So basically what expats are getting, they're getting the exact same interest rate as a normal resident applying for a mortgage. There's no difference in rate. The only thing they have to do when they come home is amend their correspondence address, and that's it. They have the same interest rate. Now, obviously, if you went directly to the likes of AIB, it's buy-to-let rates, which are about, I think the fixed rates at the moment with them are about, I think they're close to 8%.
Wow.
So what you'd have to do with them then when you come home is prove to the bank that you're back living here, and they will move you then. Just proves your primary residence, and then they'll move you on to normal home loan rates. I don't know how tedious the process. You know what it's like dealing with banks. I don't know what the process is, but I think it's not too bad. Once you can prove that you're living here, provide pay slips, utility bills, maybe show banking account activity for a few months, they'll move you on to normal home loan rates then. But we get those rates from the outset.
This is the value, isn't it? It's just why would you put yourself through that if you didn't need to? It's just make it as easy as you can. Okay, so can you step me through, because I'm trying to think back to when we got our mortgage, and I'll be brutally honest, I think my husband dealt with most of it, so I'm not an expert on it. What does it look like? What's the process? If somebody kind of wanted to kind of have some idea, because, I was saying to you before we start to record, we found in Australia, buying a house was a really set process. Do you know what I mean? It was like, you put an offer down, if your finance isn't approved by this date, the sale falls through. Whereas in Ireland, it tends to be this kind of, I don't know, it's like some kind of a weird dance that can go on for a really long time. And I'm sure the mortgage is a big part of that. What does it look like when you go through the process?
I always say to people, until you have an approval in principle, don't even open up Daft or My Home or whatever it is. Don't look, because you're tormenting yourself. You will not be taken serious by any selling agent unless you can provide proof of funds. Okay. Proof of funds would be the approval in principle cert. Now, what a lot of selling agents will look for as well, and you'll probably be shocked when you hear this, because obviously you're looking for, say for example, if someone is buying a property for $500,000, an expat, and they want a mortgage at $350,000, which is 70% finance. A lot of selling agents will ask to see, they'll want confirmation that you have the $150,000 in savings to cover the deposit as well. So don't be surprised if you're asked for that. Now, generally, if I got a call from the selling agent, I'd be able to confirm that over the phone or by email, because I wouldn't submit an application unless the balance of funds were in place, whether it be through all savings or savings and a dig out from parents as well. So I wouldn't submit an application until we have that in place, so I can confirm all that. As I said to you, the main starting point is to get the advice, because we have to establish affordability for a mortgage, affordability for expats. The only way expats can show affordability is through regular savings. I'll explain how it works. What the bank does is they will stress test whatever the customers want to borrow at 6% over whatever term they want. Now, the max term for expats is 25 years, but obviously if someone comes to the table, and the max age of Haven do mortgages up to age 68. So if someone two applicants come to the table and they're both age 50, max term is 18 years. But the max term we can do normally is 25 years. So whatever the stress test repayment is, say for example, it's €2,000. Well, then the customers have to show clear affordability for the 6 months lead up to the mortgage application. And the only way expats can do that is through a regular savings pattern. So it's the most simplest way of explaining it. Customers are transferring, say it's 3,000 Aussie dollars. They're transferring 3,000 Aussie dollars into a savings account every month, and they're not touching it. They're leaving it alone. Like I'd often get cases where people they might have 500,000 Aussie dollars in savings, but they might have 25 different savings accounts. They might have 3 different share accounts, deposit, and they're moving money. They're probably bored at home and they're moving money here, there, and everywhere. And all of a sudden, I can't nail down affordability. And they're looking at me, Paul, I can't get you a mortgage because I can't see affordability. So I have to go away and tell, look, go away, save that every 6 months, or every month for 6 months, and come back, and you'll be fine. That's one of the main qualifying criteria. Now, we also have to factor in, obviously, rents, childcare costs, because obviously once you move into the realms of having 2-3 kids abroad, the childcare costs go they go high, and then one of the applicants either stops working or starts working part-time hours. So we need to know all of that, and that will give us an idea of what their max borrowing potential is based on their current scenario, things like that.
And that's really interesting, because I'm having this conversation in the context of somebody who's planning a move to Ireland. But I think what you're saying is the banks basically look at affordability in the foreign location. So they're looking at foreign childcare costs, which are completely redundant if the person is only trying to secure a property to come back and live here, and then they're going to pay Irish. So it's really a point in time that they look at, isn't it? And kind of what happens after that, as long as you've got your approval, is your own business to some extent.
Yeah, look, they look at childcare. Childcare costs, I think, are probably unfair because it's not a situation you're going to have childcare costs for the full 25 years of the mortgage. But they look at, I know in some countries, childcare costs is subsidised. So it's, again, I know I'm harping back on Australia because that's where probably that's where most Irish people went to back in the day. They'll pick up childcare costs from your bank account. So whatever's leaving your bank account on a monthly basis, that's what we have to factor in for childcare costs. The reason why we have to factor in a foreign rent is that, say, for example, if someone wants to buy a property now, but they're not coming home for 2 or 3 years, well, then they will continue to pay rent abroad while they're servicing the mortgage over here. So we have to treat the foreign rent like a personal loan. And that does have an effect. Now, if you're doing an application for a customer in Singapore, rents are just ridiculous over there. You know what I mean? And what I'm after seeing as well in the Middle East, I can see rents spiraling in the Middle East as well in some areas. And people could have been on astronomical salaries, but they're paying an astronomical rent. And I go back to them and say, "Oh, you only qualify for this," and they're speechless on the phone. But it's just due to the high outgoings. Do you know what I mean? So, generally, again, I say when you're talking the amount of kids that you have, that has an effect. And then, if you're into the realms of having a joint applicant, one income earner with kids, childcare costs and rent, the earning applicant would have to be on a very, very big salary, because generally on 99% of cases, you do need 2 incomes. Having a second income, no matter how small it is, makes a huge difference to how much you can borrow.
Then I'm just thinking about how that plays out. I'm thinking it probably plays out that some people will initiate a discussion with you. You will give them the information and say yes or no, you're going to get approval or you're not.
Yeah.
And then there must be a cohort of people who go, you know what, this is the too hard basket. We're going to go back, we'll rent for 6 months, get jobs, rent for 6 months and reapply. Is that where people go if they can't get over that hurdle of getting it from abroad? You
see, what I don't want to do, and you'd often see it with the banks, if you have someone who's dealing directly with the banks, they'll do anything to get you in the door. They'll tell you exactly what you want to hear, but they're only really doing it to establish a relationship with you. They'll probably waste about 3 months of your life and then tell you what I'd be after telling you after 15 minutes. I just don't like wasting people's time. I know and again, I don't mean to get a big head here, but I know the criteria and I know what the pitfalls are. If there's a small chance of getting this over the line, I generally get some small amount of support and documentation from the customers and submit an inquiry to our broker representative, so she'd run it by credit, and then they come back to me and say no or yeah, and then we'd apply then. But generally, if people don't qualify from abroad for some reason, I tell them straight away, look, you're qualifying for €20,000. You're going to have to wait till you come home. And I'd always say, when are you coming home? They might say, the end of next year. Call me a month or two before you come home. We'll go through all the information again. We'll have they might have jobs lined up when they come home, because they could have came home from a few holidays. They might have something lined up. And then I'll put them on the right track. So when they do come home, they know exactly what to do when they start straight away. Because nothing worse because you'd often get this, and this is, some people could save up a lot of money abroad, 300,000. They come home, they both start work, they move in with family, there's no rent, and they stop saving. And they might have any affordability. And they're looking at you, probably 400,000 in savings makes no difference. You've no affordability. And you have to have affordability demonstrated on the 6 months lead up to your mortgage application. You could have saved a million euros prior to that and stopped saving. Makes no difference. 6 months is key. And that's why I always say to people, don't get the advice too late. Get as early. You can get the advice now, and you might be home for 3 years. I often get, I'm getting emails back and calls back from people I spoke to 3-4 years ago, and they're only coming back now because I told them to come back to me, because they're coming back this year or early next year. So just going through things with them again. So when they do come home, if it is a situation where they're applying when they come home, well, then I put them on the right track. And generally, when they normally do listen to me, they get approved straight away after 6 months.
That's why I think what you guys do is so good, is because, people are like, I would like to kind of be able to speak here and say, moving to Ireland is easy. And it is in the majority of cases, but it's commonly known, emigrating anywhere is not easy, even if it's back to the location that you kind of grew up in. So when you're dealing with people who know the ins and outs, it actually does just make your life easier. Because, to go back to your point, if somebody contacts you and says, you know what, we have found a property and we want to buy it and we want a mortgage and we are living in Singapore, for example, and you have probably a difficult conversation with them and say, you know what, realistically, it's just not going to happen. That's disappointing, but you don't waste time, you don't waste energy, you move on to the next thing and you kind of recalibrate and you make a decision. And that was kind of our experience when we came back, was that sometimes you were disappointed, but you just got on with it. Where people get really frustrated, I find, is when they go through that process you said the banks will sometimes drag you through. Come talk to us for 3 months, fill out 50 pieces of paperwork, and we're still going to tell you no. That's when people lose the will to live, because then there's lots of emotional energy has been wasted on it and the answer is still the same. So I think what I'm hearing is, 6 months healthy finances is must, whether you're abroad or in Ireland. And that's kind of a message to people who are looking for a mortgage across the board. But, in the majority of cases, it's going to be very specific on your situation, but having somebody help you navigate that process is going to make it easier, regardless of what the answer is going to be at the end of it.
That's what we aim to do. Like obviously the mortgage process, if you're applying from in Ireland, it's daunting. But when you're, I suppose, 3,000 miles away and you have no one contacting on the other side exactly where you are, I email them I won't say every day, but I keep in contact and I explain to them from start to finish. Just listen to me. I'll talk you through the whole process, from approval stage, valuation, structural survey, everything. I tell them exactly what to do step by step. They're always sick of emails off me at the end of it, but they're never left sitting there. What do we do now? Because I'm always telling them, here's what's outstanding, here's what we need to do. I suppose a coach is probably too strong a word, but because I think most people do appreciate that. They're never left in the lurch.
Oh, and look, buying a house is one of the most stressful life events. Yeah. Getting a mortgage to buy your dream house or your house is also stressful. It's a hurdle you have to get across if you want to get to that place. And, a lot of people are coming back, and I see as well, a lot of people, they've gone overseas and they worked really hard for the money that they've saved. Like that €400,000 or dollars, whatever it is, has been hard got.
Yeah.
So I think, I think that's a really massive plus for your service. I've never had a client get upset with me because I've given them too much information or held their hand too much. So I think that's a massive positive. Okay, there's so much to that. I kind of feel like we should definitely have another chat. Can I ask you, and I'm putting you on the spot a little bit, give me the top 3 things you would like people to take away from this discussion? Because there'll be a cohort of people who'll maybe fast forward to that bit. But yeah, tell me what if that's easily done.
I suppose the number one, obviously, I've already said it already, is get the advice as early as possible. That will find out whether it's an option for you to buy abroad or whether you have to wait or come home. Now, there are some situations whereby, like for example, self-employed status, people can move while they're abroad from self-employed status to an employee status. So they might want to bite the bullet because they're definitely coming home. So there are situations where we can help people in that instance. But I always say to people, get the advice as early as possible so we can determine when we can get an application sent, whether you have to wait or whether you can do it before you come home. That is the one, and everything else after that follows. Because once we get to talk to people, we can spot if they're not saving enough, if there's childcare costs. They might have to move, if they could be living in a property with a massive rent, they may have to downsize to a lower rent. We can spot all these things. There's very few things that you can manipulate to get a higher loan amount. Maybe one of the applicants could be working part-time. The option is to go working full-time, move to cheaper rented accommodation, things like that. They could say to you, look, we're paying childcare costs now, but they could be coming down because they're going the youngest is going into school, so they'll be gone. So that'll determine when we can get an application away. But we can, by having a conversation with someone, whether it's over the phone or over Zoom, we can spot all these things and we can plan ahead if need be. But the main thing, and it's the only thing, is to get the advice, and all the other possible issues after that can be weeded out, basically.
That's brilliant. It's always better to have one key piece of advice rather than having to remember 3. So I like that.
Yeah, exactly. We spot potential issues. If it's an absolute no-go for some reason or another, say the incomes aren't brilliant abroad, they could have 2 or 3 kids, childcare costs, higher rent, they might qualify for 0. I tell them it's an awful thing to say because the people are in shock because they're on big money and they have a good lifestyle abroad. But I will tell them, look, you're not going to qualify for anything at all at the moment. Here's why, and here's what you have to do. And then I think most people appreciate that. Probably being overly honest, but I think it's the only way to go. There's no point in keeping people stringing along.
And I think, there'll be a lot of people listening to this, and if I was, I'd be thinking, how do I contact Paul to have a discussion? What's the best way for people to make contact with you, Paul? Taking that key piece of advice, do it as soon as you can.
Yeah, just email paul@topmortgages.ie, set up an appointment, and we'll arrange an appointment when one or both of you are present. We'll go through everything. Some appointments can go on for an hour, others 15 minutes, but at least you'll know exactly where you stand, whether it's an option to buy from abroad or not. And because you'd often hear people, I was talking to Tommy in the pub the other day, Tommy got a mortgage, no, he's worse off than us. Don't be listening to that. I hate when I hear that. I always say to people, talk to me first and I'll tell you if it's an option or not. And it could be a situation whereby I might be able to, if it doesn't work through me, but people actually have their sale agreed on a property, it might work with AIB directly because it's a buy-to-let. It's a little bit different, but I can introduce them to a mortgage manager in AIB here. I'd run the case by him and he'd tell me, look, Paul, that could work here. And I'd send them on to them. I don't mind missing out on the business once the customers get sorted. But that's basically how I'd operate.
Brilliant advice. Really, really good. I've learned so much from talking to you. Thank you. We really definitely need to do this again. And you've given your contact details there. For anybody who's a regular listener and, you have questions, I suppose, specifically around some of the the points that Paul mentioned about coming back from abroad and working for a foreign employer, we offer consults as well to kind of talk about the tax issues. And we tend to work quite closely with Paul when we can see people need a mortgage. We are specialists, so we like to refer our clients on to trusted specialists too. So thank you so much for the chat, Paul. I think we'll have to line another one up, and enjoy this lovely weather, and I'm sure we'll talk again soon.
No worries at all. Thanks, guys.
Thanks for listening to Taxbytes for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.